Hey guys, so we're back with, this is exercise 3-18, so this goes along with the cash to accrual video that I did before, which just is basically the explanation, just a quick intro of how it works. So in this problem, we have Jill Accardo maintaining accounting records of Accardo Clinic on a cash basis. During 2017, he collects $142,600 from her patients, and this person pays out $55,470 in expense. At January 1 of 2017 and December 31 of 2017, they basically have these balances, right? So what they want you to do is basically say, prepare this schedule to convert the excess of cash collected over cash dispersed to the net income on accrual basis for 2017. Okay, so the way I'm going to recommend doing this is to have your book out and to have the solutions out so you can kind of follow along. I have the main facts written down here, but that's what I would recommend, is kind of having your book and the solutions out while you're following along here. Okay, so like we talked about before, we want to set up our framework. So let's start out on the accounts receivable and the service revenue side, the unearned service revenue side. So we know that she has cash collected let me move the paper. Cash collected of $142,600, okay? And then we basically have to do our add and subtract of accounts receivable and unearned service revenue. So again, accounts receivable beginning balance was $92.50, given in the facts, and ending balance is $15,927. All right, so the beginning balance of accounts receivable, what do we do with that? Well, we have to subtract that, right? So beginning, I'm going to use a little bit of shorthand here just because I don't necessarily feel like writing out the entire solution again, but just so you know that's a beginning accounts receivable. So we have to subtract that, right? And so why do we have to subtract that? It's because this $92.50 is embedded within this number here, within this $142.600, but it's not actually revenue of the current period, right? We collected the cash, but it's not revenue. And we always have to remember we're starting at cash and we're trying to end up at revenue, right? We're trying to end up at accrual basis numbers. And so this cash collected, this beginning accounts receivable is cash collected, but it is not accrual-based revenue, right? So we have to cancel that out. Just imagine that there's $92.50 here and we're just canceling it out, right? Ending accounts receivable, what do we have to do for that? Well, it tells us to add it. Why does that make sense? So we have to add $15,927. That makes sense because we think about, okay, what happened when we sold this, right? We would have made the journal entry that says debit accounts receivable and then credit some sort of revenue, right? So for $15,927, right? $15,927. And so you can see here there's no cash involved with this, right? So up here at cash collected, we would have a big zero with respect to this ending accounts receivable, right? We would have literally nothing there, right? But at the end of this schedule, right, we're trying to get to accrual basis revenue at the end, right? And we want this $15,000 included in there because it most certainly is revenue, right? We earned it in the current period. So we need to add that in. Then we have two more items on the revenue side. We have our unearned service revenue, beginning and ending balance. So unearned service revenue, I'm gonna have to add in the service revenue. I'm going to add in the beginning and ending balances. So beginning and ending. Okay, so for beginning, what do we need to do? We need to add the beginning balance. Okay, why does it make sense to add the beginning balance, which is, in this case, is $28.40? We have to add the beginning balance and unearned service revenue because that would be revenue we would earn in the current period, right? So the journal entry for that would be to debit some sort of unearned revenue and then to credit the actual revenue account at $28.40. Okay, and so you can see in here, there's no cash involved with this journal entry, right? And so again, we would have nothing up here, but we want this $28.40 included in this bottom number, okay? So we want the $28.40 included in this bottom number, but it's not, it's a zero, so we have to add it to get to the number that we would like. Okay, next we have to look at the ending unearned service revenue. And so what do we need to do there? Well, it tells us that we need to subtract. And so it's subtract 41111. And that makes sense because we have to think about, again, what is going on here with this ending unearned service revenue. What does that represent? That would represent cash that we collected in the current period, right? So you could imagine that within this 142.6, there's 4111. Part of this 142.6 is this 411 or 4111. Okay, and so that would be, we got cash, right, and then we credited unearned revenue, right? So you can see within this journal entry here, there's no revenue involved whatsoever, right? And so the thing is, there is cash, right? And so this is not revenue, right? But it does involve collecting cash. And so we have the cash embedded within this 142.6. We have this 4,111. We have it within this number, but we don't want it here. We want a 0 at the end, right? For this specific transaction, we want nothing because we haven't earned any revenue. So we have to just cancel out. We have to cancel out the 4,111 when we do that. So then we can go ahead and do the math. Just give me 1 second. I have to type this into my calculator, and then we will move to the next part of the video. Sorry guys, 1 second. Plus 15,927 minus 4,111 plus 2,840. So it's saying that this is 148,006. So that's the first half of the transaction. And now we have to do the expense side. Okay. So now let's go ahead and look at the expenses very quickly here. So let's just flip to the front here. Remember, we have cash paid of $55,470. Sorry if I messed that up a little bit, but cash paid is equal to $55,470. And then again, we have to do our adding and subtracting. Okay. The first thing that we need to look at in this case is accrued expense. Okay, so we have our accrued expense, beginning and ending accrued expense, and then we would have beginning and ending prepaid expenses. All right, so let's go ahead and do this, and then we want to say accrual basis expense. Sorry, I'll move it up. You guys will be able to see it. Okay, so now beginning accrued expense, okay, we have to go ahead and subtract out the beginning accrued expense. And the reason for that, so that's 3,435. The reason for that is because we recorded the expense in the prior period, right? So we've already recorded the expense of the prior period, so it's not an accrual-based expense of this period, but we have 3,435 in this 55,470. So we have to cancel that out, okay? Then ending accrued expense, we have to go ahead and add that, so that's 2,108. And that makes sense because at the end of the period, we would say debit the expense and then credit the accrued liability. Okay, debit expense, credit accrued liability. And you can see here there's no cash involved in this journal entry, but we want it to be an accrual-based expense, right? So we would have 0. With respect to this transaction here, we would have nothing included in the cash paid, right? But we want this 2,108 in the ending, so we have to add it. Then the last two, beginning prepaid expense, we have to add that, okay? And that makes sense because we paid the cash in the prior period, right? And so that means there would be no cash from this period. For this period, there would be 0 in the cash paid, but we want to record this as an expense because we're using it up in the current period. And then finally, the prepaid expense for the ending balance is 3232, and we want to subtract that because that would basically be where we would say you would debit the prepaid expense and you would credit cash, right? But that's not an expense of the current period, right? And so we would actually have said, okay, cash went out at 3232, right? But we want 0 at the end here, okay? So then we would have to subtract that out. I don't have the math for this, and I'm at the time limit for the video, so just go ahead and punch that in, but it should get you to the right answer, and I hope you found this video helpful. and be sure to look for more. Thank you.